All right, so yet again, good evening to all our masterclass participants. We are in our usual Saturday evening session, and this time we are conducting our session a little early at 4 o'clock. We are on the 6th of July, and we are looking at a Nifty which is across the board pretty strong in terms of the trend. Yes, it has been relatively weaker in terms of the momentum, but the price is not matching. We compare continuously, relentlessly, the behavior of what is the momentum of the price and vis-a-vis the direction of the price. When they don't match, that is where we expect some choppiness, and that's where we tend to trade carefully. So that's where we are with the Nifty daily. It has given us red HAGB trend-wise, no problem. We can see our histograms are angling down. So expect some bit of a choppiness, volatility, maybe upside breakout can face some resistance, all those kind of behavior, stock specific market, index management. So that's where we are. Until and unless price performs the behavior of the loss of the momentum, the trend is up, the bullishness is intact. Unless proven wrong, there is no reason to call for a top. In terms of levels, because we are dealing with an Heikin-Ashi, which we call this as a red HAGB, it needs to slip below Friday's low, number one. It needs to slip and close below Friday's low, number two. And then only can we say, okay, that's the first cut. And now we can expect some further weakness. Just a slip below Friday's low is not enough, because many a time they bounce back by the time it's the afternoon. But if they slip below Friday's low, if they close below Friday's low, then we can say, okay, we have a fractal high in place. We have a short-term top over here. Too early to say. I think Mondays and Tuesdays price behavior will confirm that. Till then, structure is up, trend is up, stay bullish, stay cautiously bullish. Small and mid caps. Now, this is where I was expecting, especially this is where I was expecting that price is slowing down, momentum is slowing down. This may lead to a bit of a slowdown. Sorry, it goes up, makes a higher high, significantly higher high, the small cap, and this is the mid cap. So divergences are not respected. Thankfully, we did not get a slip below these Heikin dojis. The price never slipped below these lows, so we never got a confirmation, thankfully. CNX 500 will give us a very, very bullish behavior. This is where it tend to slow down, a 1-day fall and probably a 7-day run up. So very strong charts. There's no second thoughts about it. Coming to the sectoral indices, this is where it gets interesting, and this is where I will bring in our RRG graphs. I generally do this with you. This is stockcharts.com, and I will go to the NSE sectors and view them as RRG. This is SNPX, and I'm going to make it to CNX 500, update it. And let us quickly take a look from a 1 week's point of view in terms of price behavior. There's no need to look at the tails or the position. So across the board, all positive sectors led by IT. And I think we've done pretty good in looking out for that bounce back. And IT is the biggest gainer, followed by the small cap. We just took a look at it. The mid cap is not far away, 2.5% gainer. Then there's the healthcare, which sustained the breakout, throwback and bounce back. Media is something I don't track that well, but oil and gas, Reliance is doing exceptionally well. So pretty strong sectors. It's not that the top sectors are some media or some odd sectors which do not have much weightage, like reality or media. It's IT, the second most highest weightage in terms of sectoral behavior. Healthcare is there. It's not one of the biggest, but healthcare is there. Oil and gas, definitely yes. Or ONGC, Reliance, NTPC. So power and oil and gas together is what I mean. On the minimal gaining side, it's Bank Nifty. It's okay. The Bank Nifty gave a phenomenal move recently. It held the market up, so it can slow down. Auto slow down a little bit. We did see Maruti cooling off. So there's nothing much to complain about. There's no significant exceptional standing out. Sectors which had rallied has slowed down, and fresh sectors or fresh movement have come in from sectors which were not doing good, especially IT. Now what we'll do is we'll extend the length, the tail length, to about 12 weeks. That's our window, around 3 months. We're going to fit it, the 12, and now we're going to sort it in terms of their tail. This is the sorting in terms of the tail. So first the leading quadrants, the improving quadrants, the weakening, and finally the lagging. Auto is up there. Auto is up there in the leading quadrant, but it's losing some vertical distance, which means the momentum is slowing down. And same thing is, not same thing, the reality is in the same quadrant, but the opposite thing, it's had gained vertical distance from weakening to leading. Let's evaluate them one by one. Starting with CNX Auto, what we are going to do is try to compare the positioning of the RRG vis-a-vis the actual price behavior. Now, strong charts on the weekly, no problem whatsoever. Daily chart, CNX Auto has just gone through a short-term correction. It's holding well. Momentum has kind of given away. So we don't have a confirmation of a proper trend reversal yet. So I think it's going to stay stock specific. I think it's going to be something like Maruti gaining, Tata Motors losing, M&M flat, Bajaj Auto bounce back, maybe TVS Motor bounce back, and Hero Motoco losing, something like that. Not a particular thematic movement. We won't be looking for any trade here right now. From a short-term point of view, short-term trader can look for a breakout in the 125 or 75 minute time frame. So predominantly bullish from the CNX Auto. Realty, there you are. Now, reality on the weekly charts also holding very strong. No contra signals on the weekly chart of mine. Daily chart goes through a short-term correction. This was the pullback, wherein I was looking for a follow-through move, pulling back, and whether the lows get breached or not, no, and it goes back further up. Again, this is a situation where the trend and the momentum seems to be not, matching up with each other. So we need to keep a close look at how price plays out. The improvement over here is pretty impressive. So both reality and auto stays in the leading quadrant. And there are a bit of a mismatch, and there might be a bit of stock specific behavior. Small cap is up here. Now remember, small cap was weakening and it just bounced back. So that's exactly matches with the small cap chart analysis that we did. You remember we did take a look at a situation on small cap and mid cap where they had kind of slowed down. This is that area. This is where they were weakening. So in a situation of a natural price behavior, an uptrend before it reverses tends to slow down, create some distribution kind of a behavior, and then reverses. This was a leading indication, but that's not always the case, and it rallies. So small cap is strong, mid cap is right up there. We analyze both of them. And then there's consumer durables. Consumer durables is just hovering down here, right between the leading and the weakening. It's a leading quadrant, so it should be structurally pretty strong. Let's look at consumer durables. There we are. Weekly, very strong. No signs of contrarian behavior on the weekly chart. Yes, there is a bit of a sign of momentum slowdown on the daily time frame, and it's taking the shape of that classic rising wedge on a rising market behavior. I'll be focusing more on the closing prices of the Heiken. That will give me a very clean, neat looking rising wedge. That's the rising wedge in a rising market with momentum dropping. You can see how clean it is, how nice it is on the 125 minute time frame. Something like this, a rising channel, a rising wedge. So what are these? These are consolidations. After an uptrend, it's a sign of slowdown. Recurring highs are not that higher. They tend to become smaller. This is where you tend to get divergences with your momentum in oscillators. So it can cool off a little bit, a customary short-term correction possible, but they are likely to be very short-term in nature. No sign of problem here on the weekly chart. So short-term, one would like to avoid the consumer durables to go long, maybe at lower levels. Come to media. Media is something that I'm not very big fan of. Come to FMCG. Now, FMCG has improved significantly from the lagging, has gone to improving. Now it may sway in this zone for some time, but eventually it should go to leading. So FMCG should lead sometime. They generally do not go back. They generally do not go back. They will go to leading and then they will come down. So let's see. Let's take a look at CNX FMCG. I love the weekly charts behavior. The weekly chart has given a nice bounce back. It's at previous breakout levels. Someone might say it's looking like a big cup and a small handle. Maybe, I don't know. But momentum is picking up on the weekly charts. Pretty good. Bullish chart. When we were talking about how FMCG, we should look for a long trade because of the previous highs and the lows, the polarity kicking in there, and we got this bounce back. It's a bullish chart. We should stay bullish. Bank Nifty and CNX Finance. Both of them are in the improving quadrant. Both of them have picked up a bit of a vertical distance. Now it's losing in the vertical. It's not actually gained significantly horizontally, which means it's not shown that great relative strength yet. But these are very good signs. The chart will give us a very bullish reading also. First, let's take a look at the Bank Nifty chart. There you go. Pretty strong weekly behavior. No sign of any contra behavior whatsoever. A bit of a reverse divergence kicking in on the short-term momentum indicators. Don't have a red HAGB to kind of confirm this. This is what I mean. You see this? Very clean looking. So it essentially is like a breakout failure. Breaks out, couldn't sustain, drops, pulls back. And if this is a serious trap, then they should fall. Which means a break below Friday's low. If in case Friday's low is breached on Monday itself, then probably the few selective banking names can come down. Again, very short term. These are contra views. Charts are very strong. Don't expect some huge sell-off. There's no such signs. CNX Finance probably will kind of mirror this kind of a reading which we saw in the Bank Nifty. Yes, it is there, very much relevant. So keep an eye on few selective banking and financial names which can lead to a short-term correction. Then we come to the weakening. This is the erstwhile leading guys which are slowing down. So if metals and oil and gas is weakening, then we can see that IT is improving. We will see this. We have seen consumer durables, FMCG is improving and probably going to leading. Starting with the metals. Metals is losing vertical grounds. Oil and gas has also lost a lot of vertical grounds. Now this is not a good sign. This is a sign that it's losing relative strength. Now let's see whether that resonates on the price behavior or not. Oil and gas, energy, CNX Energy. Now this is what CNX Energy is doing. It's in an uptrend. It's dragging itself up all throughout. It's losing a bit of momentum. It's really choppy behavior. If we just excuse this election result drama, then bounce back, fall, bounce back, short legs of falls and bounce back. So it's been not a very natural looking uptrend. If you see this is an uptrend, but this is a volatile uptrend. See this? This is a volatile uptrend. This is not a very, very clean uptrend. There's no sign of bearishness. What the RRG graph of the oil and gas is giving us this, but it's not getting reflected here. It's still an uptrend, but it's a volatile uptrend. Trade carefully, stay bullish. The other one was metals. Let's take a look at the CNX metal over here. There you go. Now the metal has signs of contrarian behavior and loss of momentum. A range bound behavior. You might probably get some kind of an ascending triangle out of it. You can force an ascending triangle out of it. The daily charts is predominantly bullish and urging for a breakout. The weekly charts are interesting. Now as I zoom into this weekly chart, I would say that we should keep an eye on not last week's low, but last to last week's low. That's more important for me. The doji behavior that you can see. The doji behavior that you can see, this low is important. So yeah, maybe a short-term breakout. Maybe that breakout can lead to a trap. Who knows? But it looks like a bullish, bearish beyond last to last week's low only. Okay, so it's kind of not exactly make or break, but it's slowing down for sure. Then the last few, wherein we have the IT and we have the healthcare. Remember, IT and healthcare really posted some really good gains last week. IT, vertical distance gaining. So it's picking up momentum. And in terms of price, it has given us a very good move recently. There you go. You cannot ask for anything better than this. This was the breakout failure behaving and one-way move. Beautiful rally on the upside. We've been talking about this for a very, very long time, that some kind of a leadership should come in from the IT, polarity kicking in. Weekly is behaving fine. I wouldn't complain anything from the weekly charts right now. Daily is also fine, though there is a bit of lack of momentum, but I shouldn't complain. The Heiken Ashes is not telling me anything to be worried about. All that I can say is, yes, it is stretched. And stretched price behaviors tend to go through a small little consolidation or a small little drop. Do not try to go contra here. Do not try to short IT at all. Any kind of a drop for here on can be a good buying opportunity. Healthcare or CNX Pharma, if you remember, had given us recently a breakout on the weekly charts, then the throwback and then the push forward. So the breakout is successful. All this while it was questionable because our momentum indicators were slowing down, but the trend was stronger than that of the momentum. Of course, the overall market was really helpful. The overall markets were very strong. So Pharma also bullish. So what do we get? We get almost all the sectors are bullish. There are no signs of structural slowdown or contrarian behavior except Bank Nifty and CNX Finance. So that will be an interesting pocket because even a small fall from the Bank Nifty and Finance can lead to a bit of a cut on the Nifty and the overall sentiment of the market. IT is stretched, so IT probably will not be able to support that fall if it comes. But apart from that, auto or energy or metal or pharma or realty or even consumer durables, none of them are giving us any strong contrarian topping out behavior yet. Only Bank Nifty and CNX Finance. And maybe the last one which we discussed, the second last one, which was I think metals. Maybe metals, but only before day 1 week prior, not this week, the previous week's low. So it's predominantly a bullish view, and we should stay cautiously bullish predominantly, and we should go with the long trades unless we have any evidences to be careful or look for shorts or stay away from the market. Let's not create any top in our mind right now and stay with the flow. All right. So that's it. That's the view on the Nifty and the various sectors. Now the second step will be to update our sheet, and then I'll take up all your trades, all your questions related to the trades next week.